Hello, everyone. Good afternoon. Hello, hello, hello. Welcome back to our channel. I'm Ronaldo Dela Vega, the house doc of Lpt Realty. We're here today to be talking about mortgage loan. And before we do that, I just want to thank people who subscribe already in my channel and made some comments. Thank you so much. And if you're not a subscriber yet, please subscribe, like, put a comment, and hit that notification button so that you get notified on the next video. Hopefully, you enjoyed our first video with Dr. Gadam, a dentist in Fremont. And again, thank you for those folks who came to my to our parish festival, which is a community event in Fremont Holy Spirit Church. Thank you so much for everybody who came down and interacted with us and hear about real estate and what we offer, services that we can offer. Well, today we have a very special guest, a trusted mortgage senior loan officer, Mr. Luis Orbegoso from New American Funding, and he's here to help us understand the ins and outs of getting a home loan, whether you're a first-time home buyer looking to refinance. I hope this video will give you insights and made you more confident in making decisions when it comes to buying a house, which I know is a big investment. People want to have their own homes and be homeowners, and that's always a dream, right? But we have the right person here who can tell us more about this. Please welcome Luis Orbegoso.
Thank you very much, House Doc and Mr. Ronaldo. Honestly, it's a blessing to be here with you guys. I've been in the mortgage industry 21 years. I started in the big bank world, the Wells, the B of A's, the Chases, and most recently, U.S. Bank. My new financial institution is called New American Funding. We're California based. My license is NMLS ID 304029. You're more than welcome to contact me 7 days of the week. And this is what I tell my realtor partners, as much as because I cater to them and their clients and their needs. But I'm available 408-499-9239. So anyhow, thank you so much for inviting me. Let's get on it.
Yes, thank you, thank you. Yeah, so great. That was great. Let's start with some basics here, okay? Can you please explain to us the different types of mortgage loans available and which ones are the best suited, especially for first-time home buyers? Because there's a lot of products out there, right? So
Oh
can you
yeah.
please walk us through to those products?
I mean, there is a plethora of products, and that's what I bring now. Besides your standard, conventional financing, which is, literally Fannie Mae and Freddie Mac, all the way to FHA and VA. Now I have even way more options. I mean, I have over 2,000 different platforms that I can assist. I'm able to assist right now. I'm helping right now multiple families who didn't even able to qualify in the Fannie Mae or Freddie Mac bucket or conventional bucket because it's not allowed by the big bank. So I'm able to do like example. Have you guys ever heard of an I-10? Okay, an I-10 is actually a tax ID number provided by the IRS. So literally, they're not U.S. residents or citizens. In my world, we call them is labeled as NPRA, non-permanent resident aliens. So anyhow, but guess what? They're paying taxes. They're paying taxes. So the government says, "Oh, hey, you're paying taxes. We're gonna give you an I-10." And so I'm able to do those type of platforms, bank statement products, self-employed P&Ls, So it's more the creativity, finding solutions. So I don't want to get into so much of it, but we have solutions.
That's great. Yeah. That's what we do here, right? Problem solving, bring
Yep.
solutions, and give people a chance to home ownership.
That's
That,
right.
that's very helpful, sir. Now, what are some of the key factors lenders look at when approving a home loan? I know you have to apply for a loan, right? What are these lenders looking at?
Awesome question. I like to call it the pillars. Just think about the chair that you're sitting on right now. House doc. It has what? Four legs, am I right?
Yes, sir, with wheels.
All right. So the three legs, the three major component legs that will lead to number four, okay, are employment slash income. What do you do for a living? How long you been doing that for in a profession? How do you get paid? Are you hourly? Are you salary? Or maybe you're self-employed. You have your own company, corporation. It varies. In other words, your money, where's it coming from? All right. Are you retired? Are you pensioned? Again, your money is critical. How much do you make? Okay. The second component is about, hear me out, your credit history. I'm not asking about your credit score. I'm asking about your credit history. Because if you tell me, hey, Luis, I have an excellent credit score. Really? What is excellent? 800. Wow. Then that you're telling me you're not a credit abuser. You have credit and you know how to manage it. But when I ask about your credit history is how many credit cards do you have? How long have you had them? What kind of debt do you have? Again, here's the first two components: how much I make, how much I owe. Teeter totter. Okay. I want to hear like this because this is what I'm going to do. All right. The third component, your money. How much money do you have available? And that could be in your bank account, it could be in your brokerage account. Maybe you're going to borrow from your 401k. Maybe mom and dad or cousin, uncle, auntie is going to gift you some money. Those are components. And by the way, your money has three parts. Your money has your down payment, your closing cost, okay? And the third component that most lenders don't really talk about is your reserves. Well, what do you mean by reserves? Well, again, let's go over the pillars. I make this much, I owe this much, I have this much, I qualify for this much. That's the fourth pillar. Okay. So there's got to be some money, that you have in reserves. But why? But what if? What do you mean, what if? What if you lose your job? What if you get sick? Do you have that little shelter that you can dip? Folks, I want you guys to understand something. We're not in the business of lending you money and taking the home from you. That ended. You have so much protection since the crash of 2008, which I've been and I survived it myself. You know, guess what? The federal government wants to make sure that the financial institution, the banks, the mortgage companies were lending you proper. Okay.
That's great. Yeah, I mean, a lot of people suffered during that 2008 crash, and I'm one of them as well, so I experienced that.
Right
Uh,
here too. We're
yeah, so
survivors.
we're not immune to that, but that's not gonna happen again for sure. Am I?
No.
Yep, for sure. Yeah, thank you for that. So, if someone would like to improve their chances of getting a pre-approved, right? What steps should they take? I want to get pre-approved. I want now it's my time to buy a house. I have some money. I have a regular income. I have some reserve. What should I do to get pre-approved?
Contact a professional. Listen, you know what? Internet has become this whole cloud of like, oh, I know how much I qualify for. Really? You spoke to a professional like myself, who, you don't have to be 20 years like myself, but you spoke to a professional, who guided you, who listened to you, who, gave you the proper advice, then yeah, versus going to TikTok videos and, getting that advice. We're here. Talk to a professional. Number one, always that. Hey, but my mom and dad told me this. You know what? I'm not telling you not to listen. But you got to remember something. When your parents bought a home, or when your auntie or your uncle bought their property, maybe it wasn't like yesterday. So there's a lot of changes. Okay. Myself as a professional, we have to go to training every year to keep our license active. Got to remember that. So we're constantly, regulations change, guidelines change, people. Okay. Talk to a professional.
There you go. Yep, best advice. Because you want to go to a plumber when you have a tooth aching, right? You go to your dentist.
Yeah, a real dentist.
A real dentist, of course, licensed dentist, certified dentist, somebody who had a training, right?
That's right. That's right.
Same thing with realtors. They should go with a realtor who
Yes. Yes. And I'm glad you bring that up because that is so true. You know what I'm saying? We have people who come into our professions and they do it part-time. No disrespect to them, but really, we're doing it here. I eat and breathe numbers. I'm here 7 days a week. My partners, my realtors, as well as my clients, their focus is they depend that I'm giving them correct information. And if I cannot, it's my job to go find that information and present it to them.
well, that's great. You know, talking about pre-approval, right? Some people felt like, oh, I have a realtor working with me. we just want to look some houses. Come on, take me to some houses. Is that a recommendation of coming from a loan officer that we will just take a client of ours who's a buyer to start looking at houses, not even knowing how much they qualified or pre-approved for?
Do you like to go to the okay, all right. I love that question because it always stings to me. I call them window shoppers.
Window shopping.
So I myself, when I go to the mall, I already know why I'm going to the mall. It's not because, oh, it has the best yogurt or it has, really good dim sum in the mall. Okay, great. But realistically, why are you going to the mall? You go to the mall because you already know I need a pair of shoes, I need a pair of jeans, I need a nice shirt. You're already focused, am I right?
Have a
So
plan.
thank you. You have a plan. So get pre-approved. Stop window shopping. You're killing your own time. Honestly. All you're doing is you're like, oh, I really hope so. I can get that. But do you really know how much you qualify for? Get qualified first. So you know exactly what to look for
Mhm.
because all you're doing is building clouds in the sky that are just going to be popped. And you're going to be like, oh,
Yeah, that's happens to a lot of people. They get so emotional, right? They feel, oh, I want to buy this $2 million house. But the question is, can you afford it?
exactly.
Yeah,
Can
yeah,
you afford it?
yeah. Well, excellent tips, sir. Yeah. So now, give us some common mistake buyers make when they're in the process of mortgage application, right?
Oh yeah.
Well, a lot of people
And
make
there's a bunch
mistake,
of
right?
those.
Yeah, especially
Yeah.
first-time homeowners. They don't have an idea. But with the guidance of a experienced loan officer like you, a realtor who cares for them and guide them through the process, I'm sure they're going to be empowered and well educated to make decisions. So, what are those common mistakes?
Let's start with the credit.
Credit.
Okay. The credit component is critical. You heard me talk about the pillars.
Mhm.
All right. But there's also another one. So one of the components is, oh, I'm gonna go buy a car. Or I'm
Well,
gonna lease
buying
a
a
car.
house. Buying a house. I
Right.
cannot buy a car. I cannot buy
I'm
a
looking to
car.
buy a house, but yet I'm gonna go buy a car first. Guess what that's gonna do? That's going to increase debt. That's going to lower your credit score. Well, what do you mean it's going to lower my credit score? It's going to lower your credit score because it's new debt that you're taking upon yourself. Okay. Well, how long is that going to take? Well, it can take some time because, again, the credit bureaus are pulling your reports and saying, hey, you haven't had this and this new debt that you're taking upon. The other component is please set up automatic payment deductions on your credit cards, on your bills. It's the most simplest thing you can do. Let the minimum payment be deducted from your bank account. I hear all this time, there's people, oh my God, I went on vacation. Oh my God, my brother got sick and I had to fly and I forgot. Forgot what? To to pay the bill? Yeah, didn't you set it up for automatic payments? Guys, we're all humans. Things happen. Take my word, please. Set up automatic payments. Don't hurt yourself. A late payment? Oh, it's a quick impact. Not in a good way, in a negative way. Another component about the pillars, we talked about employment. I'm moving jobs. Well, wait a minute. How long you been with your current employer? Well, I've been with my current employer 2+ years and I get paid bonuses and maybe I'm in the tech industry, RSUs. But I'm gonna get more. More of what? What's changing? You know? This is so true. I see this a lot. But I love that my clients check with me. Talk to a true professional for us to guide you, okay, properly. So again, employment movement, it can affect you, okay? Even though you're thinking you're gonna make more how? More on base salary, less on stocks? Okay. Sometimes it's the other way around. More on stocks, less on base, but you don't have history. So again, that can hurt you. And again, on your credit, don't make late payments. Don't go buy something new and then you're gonna think you're gonna go buy a home because you can afford it. But your credit's gonna get dinged.
That's a very powerful information because some people don't even realize that they're making those mistakes, right? They don't know that, oh, I already put my application in, and they will never know, but they know. They will
Oh my
know.
goodness.
Yeah.
Really quick. I had a client who was, this is decades ago, probably about 17, 20, 18 years ago. And oh my God, this story is like crazy. So final approved, that means we're ready to close. By the way, lenders will check your credit before closing. Well, why? They already did it at the beginning. They want to double check. Well, guess what? They pull the credit again and they're going to verify your employment. They're going to verify your employment as well. There's a 10-day window before we close a transaction. That means we're releasing the money to the title company. We're going to make sure that, are you still there? Yes or no? What debts? Well, this lady, she got so happy. First time home buyer. She racked up about $75,000 in new debt. New debt. She want to go buy couches, TVs, dining room sets. I think she even went and go, I don't know, she went ballistic. Well, guess what? I had to call and tell her, I reminded you to please hang tight until you get your keys in your hands. But you, guess what? If you don't go return these items, you're not gonna get your keys. She panicked.
Wow. A crazy story, man. Yeah, a true story. I believe
It
it.
is a true story.
Yeah. Yeah. So I know there's a lot of talks about interest rates, right, going on. A lot of buyers are on the sideways right now, sidelines right now, waiting for interest rate to come down, and they say that, oh, I'll just wait until the interest rate come down. Is that a good way to approach this? What's happening right now, sir?
Look at my hand. No, no. Marry the home, date the rate. Marry the home, date the rate. What the heck does that mean? Why are you buying a home? You're buying a home because you're ready for that commitment. You're ready to embark yourself. Your financial means are going to get better. Okay. People, please understand you will refinance. Myself as a homeowner for 24 years, I've been able and blessed to refinance. And there's also many factors why you refinance. Okay, there's a couple factors. I'm a father of two. One of the main reasons I refinance over a decade plus is when my eldest daughter, I needed cash out, okay, to pay for her university. I did that. And the most recent I refinanced was in 2021. Why? Because rates came down. So I'm locked. I'm good. You know what I'm saying? I have an excellent low rate. Will rates ever get that low again? Nobody knows. Nobody thought that rates were going to get into the twos. Okay. So don't, please. Your opportunity right now, you guys need to understand when you're driving, don't you see more open house signs? Well, why? Yeah, you have the opportunity. It's not yet a buyer's market, and that term is different, but you have flexibility to negotiate. Okay? Let me give you an example, if you don't mind.
Yes, please. Yeah.
One of my agents that I just met, okay, and I reached out to her because, and actually you were there about the rate buy down, and she was very open. Her house has been on the market 40 days actually already. Okay? Fairly good community. They already did a price reduction. Well, guess what? Her seller is willing to get a rate buy down. Yeah, the rate right now for that jumbo 30-year fix, I'll tell you, it's a 6.875. Ooh, it's high. Well, high to what? When you don't own a home. High to what? What are you comparing it to? Oh, well, my friend. Listen, what about your friend? Is your friend going on the loan with you? No. So you're buying it right now. You're not buying it when your friend bought it. Well, anyways, the rate buy down is giving a 2% lower. So now that 6.8, it became 4.8 for the first year. For the second year, it became 5.8. There's no prepayment penalty. The seller is paying for this negotiation tactics. Let myself and the house doc help you get and do these things because sellers, guess what? They're losing money themselves. Oh, you don't know what's going on the other side. The other side could be Like myself, when I bought my house 20 years ago, 24 years ago, to be exact. Hey, I bought it from the original owners 24 years ago, and the owners had to depreciate because they were losing money. They were paying this mortgage on my current home, and they went and go buy a new home. You don't know what's going on the other side, but these are real stories. So remember, marry the home, date the rate.
Wow, fantastic. Marry the home, date the rate. Yes. And then listen to your loan officer. Don't ignore them because they know better when it comes to mortgage application. And there's still hope out there, you know. People are kind of like feeling that it's hopeless for them to own a house because the houses are prices are up there and interest is up there. But me personally, I bought my house 2004. My interest rate was 12%. Yeah. And then I was able to refinance it to 8%. I was so happy. And then it went to 5%. And a couple of years ago, I was able to do it like 2.6. So, i-
Bingo.
but
You're a
the
winner.
bottom line here is that, just like you said, right? I have the home, right? It builds equity. So some people are paying rent. I talked to some people, you know, during my festival who came to my booth, you know, asking about real estate. How's the real estate market? What's going on? They're renting in the Bay Area about $4,500 a month. And they're not being building equity, you know. So what if they put that money to buy a home, and in 5-10 years they'll build equity, you know. They can buy a price of a home this much, and then in 5-10 years they already have the equity instead of paying the landlord, paying the homeowner, the one who owns the house, the rent, and they won't get that back, you know. There's a lot of incentives in owning a home.
Yes, there is. There's a lot of incentives. I'm really glad that you bring that up because one thing that I really didn't touch base is house stock. What if you would have waited? A lot of buyers are doing that. Oh, I'll wait. You know what? If you would have waited, you would have probably paid more,
Definitely.
right? Because the appreciation in here where we live in Silicon Valley, on average is what? 5 to 7%? And sometimes some areas are 10 plus, you know? So what does that mean? Yeah, you're gonna pay more by waiting, okay? Guys, please understand, rates, they fluctuate, just like the market is fluctuating right now, okay? It comes in waves. It's just, I don't know how to surfboard, but I can tell you, do I want to catch a wave that is flat, or I want to catch a wave where I'm, riding it, you know? So be smart, you know? Reach out to us, the true professionals.
Way to go. Yeah, that's I think that's the way to do it, you know. I mean, just get educated, be empowered, and work with the right people. And we're here for you guys. And thank you so much again, Mr. Obregoso Luis. Any last tip for our potential home buyers? Final tips.
You know what? There's opportunities out there, just reach out to us. Let us know how we can, help you. Don't ever feel, well, it's not the right time. Well, where are you going with this? I hear this a lot. It's not the right time. Well, what do you mean it's not the right time? No, it's not the right time. Okay, maybe it's not, but let us know how we can help you and guide you, put you in the right position. Guys, I've in my 21 years career, I've done thousands of families I've put on. Some of them, I can tell you some of my best ones have started with like, I don't have nothing. It's not the right time, but they took the time for me to embrace them, to empower them, to help them get there. I can remember one of my top clients, and I put him as top because he followed my guidance. Ended up buying a home after, I think it was 3 years. He bought his first home. 2 years later, I helped him buy his second home. 5 years later, I helped him buy his third home. So don't make this, but online told me no, or I entered my information. You got professionals that care, okay? If they're taking the time to listen to you, gotta do that first. We gotta hear you out. because it's like going to your doctor and say, "Oh, my tooth hurt, and I know what I need." Really? And the dentist is gonna look at you. Really? You don't really need that, you know? So we're here.
Very well said. So please remind us again, our audience, where they can connect with you if they have any mortgage. I know I'm going to be sending people your way, but just again, for people who are watching our channel right now, please.
You can call me, text me, 408-499-9239. Again, 408-499-9239. Text or cell 7 days of the week. I make myself available for my clients, or you can more than welcome email me at luis.orbegoso at nafinc.com, nafinc.com. Hosdoc, I appreciate you. Thank you so much.
Thank you so
Let's
much.
help
We'll
some
put that in the
families.
comment as well, so that they get your information.
Beautiful. We'll do.
Everyone, hope you enjoyed that and learned something from it. We're here for you guys. And subscribe if you haven't subscribed yet. Like, comment. Thank you. Bye-bye.